Good morning, everyone, and welcome to Wednesday morning, the last trading day of April. In the pre-market this morning, stock index futures are currently mixed. We've got some earnings pulling the Nasdaq down a little over 0.5%. Now we've got major earnings coming out after hours this afternoon, but to get there, we've got to get through the ADP numbers that are coming out in just a couple of minutes. Then GDP numbers coming out at 8:30. Later in the morning, we've got oil inventories, and that could be important, given what the price of oil is doing right now. Now, we've got the VIX still on a sell signal. That's supportive for higher stock prices. The price of crude, looking at the futures contract, is back on a sell signal as of Tuesday's close. And we've got natural gas, the futures contract, back on a buy signal. Now, when we look at the ETFs, both crude oil and gasoline are back on sell signals as of Tuesday's close. Natural gas, it had a bullish reversal day the other day and has moved up ever since. Still waiting for the pros to take control. That may take a little bit of time. And we don't have a buy signal yet in the ETF. That would happen on Wednesday with a close above 1694. Now, energy stocks have been on a buy signal here, but they're not going anywhere. And on the TSX and in New York, we've got a nice big open gap to deal with. And so far, the market hasn't been strong enough to even test that open gap. And let's see what the crude oil inventories do to the price of crude oil today. If it continues to move lower, those energy stocks will probably start to pull back as well. Now, looking at the major index ETFs, looking at our next price targets for the iShares for the TSX 60, we're looking for a move up to 38.28. Looking at the Dow Diamonds, and we're up to the 406.25 level. We haven't taken out the high from a couple of weeks ago. If we can do that, there's a nice open gap up here, and our mathematical target is 414.06. Looking at the SPDR ETF, we have filled the open gap from back at the start of April, and now we're looking to see if we can move up to 562.50. Unfortunately, we ran into the 50-day moving average yesterday and stopped there. We'll have to see if we can break through that. Looking at the equal weighted, we're stuck here at 168.75. And you can see to get to 175, we're going to have to get through an open gap, and that may take a little work. Looking at the Qs trying to break away from the 468.75 level. Our next mathematical target is 500. Back in March, we failed to get back up to that level, so the high from March may act as resistance. Unfortunately, we ran into the 50-day moving average yesterday and stopped, and that may hold us in check. And you can see the 200 and 100 are just above that level. Looking at the Russell 2000, our next target is $200, and that's not that far away. Looking at the U.S. most actives, and I sorted this by market cap, and it starts off with Tesla, which had an inside day on Tuesday. We're trying to break away from 281.25, and our next mathematical target is 312.50. Of course, there could be potentially psychological resistance at 300, which is a big round number. Looking at NVIDIA, nice quiet trading yesterday, trying to break out above 112.50. Now, above that, our next mathematical target is 125, but NVIDIA has been making a series of lower highs. And so if we can take out the April high, then the March high would be the next target before we get to 125. And you can see the pros and the public are intertwined at the moment. So we're not getting a lot of fall through to the upside from the professionals. Taking a look at Palantir, it made a new high for this move yesterday. Our next target is back up to the high from February, 125. Then looking at Amazon, Amazon had a quiet trading day yesterday. It was in the news a lot yesterday. Trying to break out above 187.50. And if you look at Monday's high, if we can take that out, then $200 would certainly come into play. Then looking at Apple, Apple is on a buy signal here. We're trying to get to 218.75. You can see that the high from back in April is still holding us in check. And then, of course, the top of the open gap may act as a target going forward if we can take that out. Unfortunately, the pros have not taken control yet, so this is all really just short covering. There's really no money going into Apple at this time. Now, moving on to the Canadian market, and when you sort the most active list by market cap, right now we're getting mostly banks at the top of the list. This, of course, changes over time. If the energy sector was doing a lot better, then we would be getting energy stocks up in this list. But right now it is mostly banks. There's the Royal Bank moving up, making a new closing high for this move. And of course, when I say this move, I'm talking about what's happened over the last few weeks in the month of April. We are certainly trying to break out above the high from March. If we can do that, then 168.75 would be our next target for the Royal Bank. Looking at the TD Bank, a new closing high for the TD Bank for this move. We're trying to get to 89.06. If we can break away from the 87.50 level, that would be our next target. Now, the Bank of Montreal dipped into the channel yesterday, closed down 62 cents. We've got an open gap that's holding the Bank of Montreal in check at the moment. If we can take out the recent high here, then 134.38 would be our next target. Looking at Enbridge, reversal day yesterday, still closing up 7 cents on the day, but struggling here. We're trying to get to 65.63. That's a level we got up to back in January, but it doesn't look like the pros want to go there at the moment. Then looking at the Bank of Nova Scotia, we're trying to get to 68.75. We got as high as 68.66 yesterday. There's a lot of resistance at this level. You can see here that we traded all through the month of March around the 68.75 level. So that's a wall of resistance right now. If for some reason we were able to take that out, then 71.88 would be our next target. And you can see that that area will act as a wall of resistance if we can get up to that level. Taking a look at Shopify, Shopify filled the open gap, and we're trying to break out above 137.50. Got as high as 138.09 yesterday. If we can start to break away from 137.50, then 150 would come into play. Okay, folks, that's all for this morning's presentation. As you can see, we're hitting resistance in a lot of areas right now, and that may mark the top for this particular move in the market. We'll just have to wait and see. Month end is usually bullish. Bullish does not guarantee success. It often will act as a buffer if there's downward pressure on the market. Now, there's a lot of companies reporting right now. A lot of companies are not giving future guidance. So that is step one, is to not give future guidance. The next step is to give lower guidance as the recession starts to wind up. You're going to have companies starting to try to lower investors' expectations over time. Right now, they're not doing that. They're just saying we don't want to report what we think is going to happen in the future. The next level is they will start to report what they think will happen in the future. And as we can see from a whole bunch of companies who are laying people off, that those numbers are going to go down over time. Have a great day. Next time you'll hear my voice is on Thursday morning.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theuptrend.com.